The advantages of conventional financing are the fact that you can get the lowest rates, have generally the longest terms, which is anywhere from 15 to 30-year terms, and pretty much any lender you go to can do this loan for you. Be careful though, you can use this loan to purchase a property from the beginning and then use your own cash to rehab the property. But if you're gonna do that and then you plan on refinancing, you are going to have to wait a minimum of 6 months to refinance out of this loan. And then you're gonna pay double loan fees on top of that as well. If you really wanna lock in that rate and hold the property for 15 to 30 years, not add a ton of value, the conventional is gonna be the best option for you. If you're looking to spend as little cash out of pocket but still add a ton of value, then the private money, hard money loan is probably gonna be your best option. This type of financing is what we use for high value add situations, including BRRRRs or flips. This is a short-term interest-only loan for a period of less than about 12 months. What's nice is they allow you to finance the purchase price and the rehab of the property. But of course you're gonna pay for that convenience. Typically, we see about a 8 to 12% interest rate on these and about a 1 to 2.5% origination fee, depending on your experience, of course. You can get this down to the lower side of that range, depending on your experience and how often you use that specific lender. The most common version of creative financing that you might heard of is called seller financing. This is exactly how it sounds. The seller is literally gonna be your bank and you're gonna make payments to them. Typically, you'll still have a down payment and some type of interest rate, but it is all 100% negotiable. I have absolutely seen it where you can get 0 down and 0% interest. It all just depends on how motivated that seller is and how much the deal is worth to you. Again, the number one thing to remember with this is everything is flexible. Another great version of creative financing that's a little bit more formal is called DSCR loans, which basically, instead of using your own personal income and everything like that, it uses the income of the property to qualify you for that loan for that property. Cash is absolutely king, and there's a reason for it. Generally, there's no appraisal unless you really want one. We can close in less than 14 days and still do an inspection, and title fees, no lender fees. It's just all around easier. All of these things are also a huge advantage, and sellers see that as well. If you can close super quickly, waive an appraisal, that is absolutely an advantage to you. And sometimes they'll even discount their price just because you're paying cash. If you get the project done in 2 weeks, you can immediately go and refinance into a conventional product to where you can hold that property and just let it cash flow. Hopefully you watched all the videos previous to this one about all the different types of financing, but now it's time to determine exactly what's going to be the best option for you. Step number 1 is to determine exactly how much cash you have on hand to invest with. Yes, there is an option. If you have no cash, then creative financing is probably gonna be your best bet. If you have 20 to 25% of the purchase price ready to go, then conventional is probably the best way to go. Step number 2 is to determine your ability to get a loan. This is going to involve knowing your income, your debt to income ratio, your credit score, and all of those things that go into getting a loan. Step number 3 is to have that loan officer get you a pre-approval letter. We have to have this in order to offer on properties. Now, if you're paying cash, that's just a proof of funds. And like I said, that can be as easy as a screenshot. Now that you have an idea on exactly what lending type you want to use the link in the description or in the email, and let's schedule a meeting. Talk soon.